Okay folks, this is an important video describing the new underused housing tax which came into effect this year and may require filing as soon as April 30th of 2023. And what is the UHT tax? The underused housing tax is an annual 1% tax on the ownership of vacant or underused housing in Canada that took effect on January 1st of 2022. Now, the tax usually applies to non-resident, non-Canadian owners. However, don't go yet. You may still need to be required to file. And just so you know, it's not so much the tax piece that's scaring me, because the truth is the vast majority of the people I deal with every day are residents of Canada and they won't have to pay tax. But there might still be a filing requirement that everyday people like you and me may need to do. And the failure to not file can result in huge penalties, even if there's no tax. So hopefully I have your attention. Okay, I'm gonna lay out a decision tree of the most common things that may mean you need to file a return. The first question is, do I own directly or indirectly a residential property? Now, a residential property is defined as a detached house containing no more than 3 dwelling units. And by dwelling, I mean places with kitchens and bathrooms. So think about single home units, duplexes, triplexes as an example. A residential property also includes like a condo unit. So within the context of this law, an apartment building with more than 3 dwellings is not considered residential property. Now, if the answer is no to the residential property rule, you may be off the hook, but just stay tuned a little longer because there is a sneaky rule that could mean you do directly. And I'll get into that in a minute. So if you've answered yes to the residential property question, the second question is, am I excluded from filing the UHT return? Here's the exclusion. You are an individual who is a Canadian citizen or a permanent resident of Canada. Now, there's more, but this is the most common, and I will put references to all the rules in the notes of the video. Now, you're not excluded if you own the residential property through a Canadian corporation. And I'm not talking about like publicly traded companies here. I'm talking a small, privately held small business corporation. So this could be a lot of us. You'll need to file a form for all the properties held through the company. Now, you won't owe any UHT tax, but filing the form will get you out of a $10,000 penalty. And this is the level of penalties corporations will pay. Now, here's a couple of sneaky instances in which you may be an individual that is not excluded. If you hold an interest in a residential property as a partner of a partnership or as a trustee of a trust. Now, the partnership piece isn't as sneaky as the trustee piece. For example, let's say you had a personal rental property that you owned for a while and you report all the revenues and expenses on your personal tax return every year, 100%. But let's say a few years ago, the bank made you put your spouse on the deed for whatever reason, like maybe you were doing a refinance or, a big rental. Well, in this case, the CRA doesn't recognize the legal ownership in terms of where the income is reported. In their minds, there's been no disposition, and so the legal fact doesn't change where the income is going to be reported. It'll still be reported 100% on your return. But because your spouse is legally on the deed, your spouse becomes a trustee of your property and therefore are not excluded from the rules and will have to file a UHT return. It's not like a formal trust, but it's a trust-like relationship. Now, they won't have to pay the tax, assuming they're a Canadian or permanent resident, but they'll still have to file a return. Like, you don't, but they do. Like, sneaky. And failure, in this case, to not file a return can generate a $5,000 penalty. And this is the penalty individuals have to pay. And these filing requirements are every year and are due by April 30th and are based on circumstances related to the previous calendar year, regardless of whatever year end that your company might have. Okay, now the form. It's not too bad, and I put a link in the body notes. Now, this is my philosophy here. You can do this form. You might not know how to answer everything perfectly, but don't get too caught up in that. Just get the damn thing filed so that you don't get the penalty. We can fix things later if CRA gets cranky with something. Now, you can get your account to do it, but the fees to have them do it might seem excessive given the small amount of time that it might take to fill out the form. But here's the thing. The government has plunked this pretty big deal down on accountants during the very busiest few months of their year. And they barely had time before to finish everything. And now a whole other tax and filing to worry about. And while it might seem like a pretty simple form, what's the big deal? Well, getting the information from multiple people doing quality control, monitoring, and maintaining the process for executing this stuff takes time, and time is money. And there's more risk for the accountant if they have to get involved. And I'm sorry to be so bold here, but the form really isn't too bad. So take a look at it and give it a shot and get it filed as soon as possible. I will hold a few webinars to answer questions, and you can register for that in the show notes. There's a link there. Okay, now for my opinion on all this, yes, we do have a housing crisis in Canada, and yes, property values are ludicrously out of control. But the Canadian government really have to bring a bazooka to a knife fight here? I mean, talk about punishing everyone for the sake of a small minority. There really could have been a better way here, guys. But anyway, I digress. Look, if you found this helpful, like and comment. And for all things small business, get subscribed and notified, and I'll catch you on the flip side.